Okay, chapter number 3. This is what we started last time, and we looked at some of the questions as well. How can we calculate interest rate? This is what we looked at the last time about compound and a simple interest, how it was calculated. We already discussed this example last time, right? How to calculate a compound interest and a simple interest using these formulas. This is the formula to calculate a simple interest, the F, and then we looked at on how do we calculate an F using a compound formula. And then I ask you to look at these questions, 3.2, 3.3, and 3.4. Yes, is there any question until this point? Okay, just you can look at it. I'm just showing you this one, the same thing, same slide. Exercise 3.2, how interest is calculated. Sometimes you have to calculate what is the amount of interest. How do we calculate an amount of interest? If you see this question using simple interest and compound interest, what was P given? Interest rate was given. The number of year was given. Then we calculated F, which is 27,000 under both methods. So what is the amount of interest earned, which is F minus P is the amount of interest earned under each of the options. You can just solve it and practice. Same thing on this question. Now sometimes the questions will be asked that, okay, which option is better? Method is same. You have to calculate an F using a simple interest or a compound interest, whatever is mentioned in the question. Like in this question 3.3, both were mentioned. Yes, any question until this point? Now question number 4, which is the next question. Three point four. If you have the book, for example, if you can see here, in question number 3.4, it says that you want to borrow 25,000 from a bank at an interest rate of 10%, compounded annually, and you are required to make 3 equal annual payments in the amount of 10,052.87 per year. How much is interest and how much is the principal payment in each year? This is the question, right? As you can see here, the total amount is given, right? And then you have to calculate the remaining balance. How it is calculated, please pay attention. Now you took a loan of 25,000. As you can see in this is just a solution, right? Now how we will be returning this loan? Can someone tell me how are we returning this loan? You are returning this loan as given in the question by 3 equal installments. Just look at a question, right? I will let me I don't have. So what I will do is I'll just paste this question into the comment section. You can see here the same question. Okay, now my question is for year number 1, if you add principal repayment plus interest payment, it is the total amount become, can you give me what is the total amount? The principal repayment in year 1 plus the interest payment in year 1, it will be how much? Can you make a total and let me know? Yes, thank you. Can you do the same thing for year 2 and year 3? If you, for year 2, if you add principal repayment column and interest payment column, what is the amount? Yes, it is same. Yes, thank you. Yeah, it will stay same for year 2 and year 3. Now I put you in a situation. Now imagine this is your car. I'm just saying as an example, you bought a car for 25,000 and you will remember this is the cash value right now. So but you will be returning this amount. You are buying this car through bank, and the value of this car, the cash price is 25,000. In other words, uh, this is what has been paid, and then you are paying it by installment. So can you tell me what is the interest you are paying on this 3 month? What is the total interest for 3 years? Can someone tell me what is the total interest you are paying? You took 25,000 loan and you return in 3 installments of 10,052.87 something. Yes, it is. Okay, this is the amount of interest is paid on 25,000. Okay, this, okay. In other words, if you take a total of the interest payment column, it should be same. Can you make a total of interest payment column? Is it same? I'm trying to explain what is in front of you, the screen. This is what we call it a schedule of loan repayment. What is the total of interest payment? What is the total of principal repayment? Can you make a total for principal repayment column? Yes, it is 25,000. Okay. Yes, thank you. Now this one we call it loan repayment schedule. How do we calculate it basically? You have to just look at a formula. For example, how do we calculate a loan repayment schedule? So important thing is how you can calculate. So what you will do is I'll explain how these numbers are calculated. You can do your own practice. For example, first one, how the interest payment is calculated. Okay, so this is how once there is a solution here, how you do it by yourself. 25,000 was the balance multiplied by 10%. your remaining balance in the previous year. I'm at year 1. Is it clear how 22,500 is calculated? Is it clear to everyone? How 2,500 for interest in year 1 is calculated? Now similarly, the next item is the principal repayment, means out of total amount of whatever our balance was. Remember, we are paying an installment of some amount, 10,052.87 is the installment minus the interest payment. You get 7,552. So out of your 25,000 in first installment, you are returning the principal amount, which is 7,552. Is it clear how this number of 7,552 is calculated? Any question? Okay, so since no question, then last one. How this balance in year 1 was calculated? The balance in previous year is 25,000 minus 17,447.13. Clear? Now similarly, you can continue with year 2 and complete it same thing. For example, first thing you have to calculate in year 2 is 10% of your remaining balance will be your interest payment in year 2. Interest payment in year 2 will be 17,447.13 multiplied by 10%. So you get this number of interest payment in year 2. Then minus this one from your installment, you get your principal repayment in year 1 or year 2. And then you can calculate the balance in year 2, 17,447 minus 8,308, you get this number 9,000. Similarly, you complete your loan repayment, and in the last year your balance should be 0. That's how you pay your balance. Okay, so this is only we have one question here and one question will be later on. Only we have two questions related to loan repayment. Why they are important as an engineer? Because remember, you have to make certain decisions, right? So in order to make decisions, you have to see what is the detail of some loan which you took in order to purchase a machine or whatever decision was made. You need certain information. So that's how we calculated loan repayment schedule. Is it clear? So if there is no question, let's move forward to types of cash flows. In different projects, different situations, you will have a different types of cash flows. Now, what are the cash flows? You may have a single cash flow, means a one amount. Let's say we invested in a project today 10,000, and after 5 years, how much will be the value of this firm if the profit is 5%, as an example. This one is a one scenario, we call it a single cash flow. So in order to solve these questions, you have to understand first of all this very important step. What is the type of cash flow given in front of you? Is it a single cash flow? Is it a uniform series? Is it a linear gradient series, or is it a geometric gradient series, or is it irregular series. Is it clear? Yes, please. Any question? Now, I will give you one example here in the comment section. Look at this one. What does remaining balance mean in the previous slide? Remaining balance means how much amount of loan is left, let's say after 1 year, after 2 year, after 3 year. This is what we mean by how much loan is left. How much loan is left? Because sometimes you want to settle your loan quickly, or you have a project, for example, you want to sell a project before its completion to someone else. It is the same concept. Is it clear? Okay, now see, if you look at the comment section, I put one example. Can you tell me what do we need to find out? Is it P or F, or what is required? You can see here, if you just see the comment, right? I just put a one example. How much can be lent now means if you are, how much a loan or project or investment, for example, whatever you call it, now means today you want to find some number. If 13,000 will be repaid at the end of 5 years. Now this one is an example of a single cash flow. You have a one amount. Understand? I hope my comment is clear. I just paste there one example. So 13,000 will be repaid if you have to give someone 13,000 after 5 years. How much you should have it today? Okay. Now this example is a single cash flow payment. How do we calculate? We have the formulas. For example, how do we calculate? Do you know the formula? How do we calculate? Can someone tell me what should be the formula I should use to solve this problem? I have already discussed. What formula should I use in order to solve this question? Remember this formula? You have two. Either you can see here, if it is a simple interest, you will use this rule. We don't know what is this rule, right? Let's say. But can you tell me what is F and P in, and what is N with this information in the question which I post in my comment section? Can you tell me what is P, what is F, or what is N? N is 5. Yes, thank you. What else? What is the amount of F or P? or what is given, what is not given. P is 13,000. P is present value. Now it says, understand, how much can be lent now? P is present. Present is if 13,000 will be repaid at the end of 5 years. So if you have to return someone 13,000 after 5 years, so this 13,000 when you need after 5 years. So what is 13,000? It is not P. It is, can someone tell me? It is F. Okay. So F is given, you have to find P. Let's say if I is given, you can easily calculate the P. Now in the questions exercises, it will be mentioned. I is, for example, interest rate, when it is simple interest, it will be mentioned that I is simple. Pay attention to what I am going to say now, right? So I is the simple interest. It will be mentioned in a question, use I 3% simple interest. If nothing is mentioned, then you have to use this formula, which is for compound interest always. By default, if interest is mentioned and nothing is written, by default it is a compound interest formula, and in order to calculate F or P, this is what you have to use. Okay, is it clear? This formula, understand again, this formula will be used only if your cash flow series is a single flow cash or a irregular series. I will show you on the next slide. See, you will have different types of series. So single cash flow or irregular series, you will use this formula. But what if you have a uniform series? What do we mean by uniform series? I will give you one example for that one. What do we mean by a uniform series? Look at this example here in the book or in the comment section. You want to save money from your business operation to replace a truck. Remember, you want to save some money so that you replace a truck, you replace a machine, anything. Remember, you have to make decisions, right? That has to be used in a delivery, right? Or in delivery. Now, this truck will be replaced after 12 years. Pay attention to the information from now, right? And the replacement cost would be about 60,000. If you earn 5% in the interest on your saving, how much must you deposit every year, right? For example, how much must you, let's say, I'll give, I'll just make a complete, sorry, this one, it should be like this one. How much you deposit at the end of each year to meet this need. Understand this scenario. Did you understand the example or the situation? Can you tell me, first of all, the P or F, what is in this question? Anyone? Okay. What is required? What do we need to find out? Let me put it in another way. The same question. Can I say it? Let's say try to put it in some situation. Now, if I read a question again, it says here, you want to save money from your business operation to replace a truck that has to be used in delivery. The truck will be replaced after 12 years. So when we will replace, let's say we are today, so it means in right now is point 0, and after 12 years we are here, right? This is our timeline from today until 12 years. So when we need 12,000, can you tell me with this situation? We need 60,000, right, to replace a truck. When we will replace a truck? Where it will be? Will it be in the beginning or end? When we need 60,000? At the end. Yes, thank you. So you need, right here, I can write 60K, or you can call it 60. Okay. So now can you tell me, is it P or F? This one is F. Clear? Now what else is information? What it says here? How much must you deposit at the end of each year to meet this need? Means how much you deposit every year at year 1, 2, 3. Remember, you want to make some saving, right? So it means every year how much you must save. We call it, let's say, A, equal amount. How much I must save every year? Every year you have to deposit some amount, right? Which is equal amount, so that in 12 years you must have, no, is it, understand? Is it clear? Understand why I'm saying this one? Because in order to solve these questions, you have to understand now which is, because there is a different formulas which we'll discuss. So this is an example of a uniform series. If you have a question like this one, you have a uniform series. How do we calculate? First of all, what is required? This amount, how do we calculate? There is a formula I will share later on, right? What is this one? You have to find A, the equal amount. How do we calculate? We will see it. Is it clear? 5,000 should be saved every year. Yes, if all 5,000 are equal, but in time value of money, 5,000 in year 1, it will increase. Remember, you will invest that money at an interest rate of something which is given in a question, right? So 5,000 in year 1 will increase, of course. Okay. So in time value of money, no, if there is no time value of money, you simply divide it by 12 and your 5% is correct. But you cannot find the answer as 5%, which is wrong, right? Okay. This is the concept which we will be learning in this chapter. I'll explain. So let's now focus on time series. How do we solve? I will explain in the next slide. This type of series, we call it a uniform series. Is it clear what is a uniform series? Is it clear? We will not solve it now, just I am explaining to you some concept. Can you see here another comment? See here, if you are making annual saving of 14,000, annual means every year, how much you will have in your saving account after 5 years, in 25 years, right? Now this is also example of a uniform series. Can you see in the comment section? Okay, so this one is an example of a uniform series, right? Series every year, how much, every year. It's not a one-time payment. Understand the difference, right? So if you can understand this one, then it is easy. So for uniform series, we have a different formula. Okay. Now, for example, I'm going to share another example. So yes, Abdurrahman, can we say A is 14,000 in this case? Yes, yes, you are right. A is 14,000. Yes, in this example, A is 14,000 exactly. And we have to find F in this case. Uh, right, if you are saving 14,000 every year, so how much will be the total amount at the end of 25 years? Yes, exactly. Ali Al Nasir, is it clear? So until and unless you don't understand this concept, solving would be difficult, confusing. Solution is very easy if you can understand which formula to use. Is it clear? What is a uniform series? Yes, what is not clear? In uniform series, you have to calculate an A or P or F, but the payment has to be every year. If you have this type of a situation where you have a uniform series, means A is same every year, right? If you have a question like this one and you are required to find F or P or A, whatever, we have a one, those factors of time value. Anything could be unknown, right? How do we find it? Just we have those basic formulas. You can use them to find a missing number. So you have to identify A is the equal amount. Let's say you deposit 14,000 every year. Annual means every year. So 14,000, 14,000. If you have this type of series, we call it a uniform series. Then next question, how to solve them to find a P or F. It depends on a situation, right? We have the rules and the formula. Okay, clear now? We'll discuss. Okay, we'll solve these one, whatever we are saying. Now look at this example. Again, another one. What do you think about this series? In the example, if you look at there, it says if someone is depositing certain amounts, right? If 2,200 is invested now, now means today, year zero. Okay, you have year, let's say one, two, this is the your timeline, year three, year four, year five, 6, 7, and 8. Let's say this is our time. It says that if 2,200 is invested now, means if you invest 2,200 now, okay, then it says 2,800 3 years from now, then you deposit another amount in third year, not in year one. Here it is 2,800 in year three and 3,500 in year five, 3,500 in years five, and then it says how much will be the total amount at the end of year 8. It says how much you will have in year 8. What will be the value of F here at this point in time? This is the question. Now if you look at here, what is the type of series? This one, geometric gradient, linear gradient. You are in graph, right? Can we say no? It is not. It is not increasing with a certain equal amount. This one is irregular series. There is no pattern, right? This example is this one. Okay, how do we solve it? We'll discuss later on, right? So first you need to identify, right? Is it equal gradient series or irregular series or whatever it is? Is it clear? Okay, so this is what actually I'm just going back to show you some series. Did I explain this one? See here, what do you have? This is what you call it a gradient. We already looked at F pattern, everything is there. Gradient. Gradient means it increase at some constant rate. Every year you can see here the payment is A pattern. See, understand the difference between A pattern, it is same, but here it is keep on increasing. Let's say increase of $100 every year. If you have this type of series, this is what we call it. Is it clear? Gradient series. Now for example, if you deposit 1000 here, next year it is 1100, next year is 1200, 1300, 1400, like this one. So increasing the amount, this one we call it a linear gradient. But if, let's say the same thing, if you deposit 1000 today and every year this amount increase by some percentage, it becomes a geometric gradient series. Okay. So those are the questions which, but what we will be covering in our course will be only these three types: single cash flow, uniform, and irregular series. These one, I'll share the formulas as well for each of them to solve the questions. Now let's look at one example, right? Now, for example, it says here, you can just look at it. This is what we call it a cash flow diagram, right? Always, if you want to solve the question, you have to put a timeline, just like what I did. Okay, time from 0 to C, and put the information on this timeline to know what is given, what is not given. If it is like this one on this figure, right? If P is this one, what is the value of F, for example? This one you call it a single cash flow, and the formula you know already, I have shared it. This is just an example of whatever we discussed in our book. It is there. This is the same thing, just repeating. Okay. So we'll take a break now, and after the break, we will continue with another concept which we call it economic equivalence. We'll continue after the break. Okay. Thank you.